Welcome and thanks for watching the Market Report. This is Marcel Pechman, analyst and writer at Cointelegraph. The show debates the most pressing topics impacting the crypto market, and it airs every Tuesday on the new Cointelegraph Markets and Research YouTube channel, so make sure to like and subscribe. We'll start by discussing an article written by Derek Anderson. SEC's Binance suit contains heavy mix of predictable charges and novel revelations. The world's largest crypto exchange has been hit with an SEC suit that many saw coming, but the details will be studied closely. The SEC has repeatedly claimed that nearly all cryptos are securities, so the list of 10 tokens deemed as securities may also be illuminating. Okay, so the US regulator is suing Binance and CZ for operating a broker without registration. So the first thing we should notice is that any decision from this federal court impacts only the services in the US or aiming North American citizens. So my best guess is A. This will likely kill Binance US operations, which hasn't been much active since they lost their local payment provider back in February. So they no longer have deposits in US dollars, the fiat cash in the US. That happened back in February, so their volumes have been really down for Binance US. We're not talking about Binance International. B. North American citizens will be barred from using Binance International. And if they opt for the VPN services to hide their IP, they'll be at risk of being prosecuted if Binance loses the case. C. Again, my best guess is that CZ and Binance will either lose or strike a deal pleading guilty, pay a fine, and be forced to halt services for North American entities, including Paxos and Binance US dollar stablecoin. Remember, the market is the ultimate judge, not you, not me, not any influencer. And its assessment was an initial 5% correction down to 25,500 for Bitcoin. Considering Binance is the absolute number one both in spot and derivatives trading markets, one might call this a vote of confidence, meaning traders believe Binance International will remain fully operational. There's also the question regarding the 10 tokens that the SEC claims to be securities, including the most obvious one, BNB. So, should Solana, Cardano, Polygon, and Algorand investors be worried? Well, there's a good possibility that the US exchanges, the ones serving those clients, will be forced to delist those names. But that doesn't mean that North Americans are blocked from buying or holding those altcoins. But it adds an extra step if you're willing to trade. For example, using a DeFi exchange. So you have to either buy Ethereum or buy a stablecoin, send it to the DeFi exchange, and from there, buy whatever token that you wish, even if it's not listed on US crypto exchanges. So the thing is, it might not impact the price right now because holders are not forced to sell, but if we have a bull run in the future and the clients are still using Coinbase, Kraken, Bitstamp, or Gemini, they won't have those assets listed on those exchanges if Binance and Coinbase lose the suit against SEC. So it removes some of the appeal for the next bull run, but it doesn't have really a short-term impact on price. So let's take a step back, because when people hear that the SEC is suing Binance, they often think that the entire operation is at risk, which is not the case, at least for now. I'll explain you my reasons. Number one, those are not criminal charges, as far as I've read from the experts. Number two, the Department of Justice is not involved, neither the CIA, FBI, or some other agency that could trigger similar action in other countries. This is happening exclusively in the USA, solely a request by the SEC regulator at the federal court. 3. The worst case scenario, we've seen that happening to BitMEX, the derivatives exchange. They paid some $100 million in fines, and the founder spent a couple of months under house arrest. Operations were never impacted, and every client was made whole in BitMEX case. Just to highlight, that's my own personal opinion, and it does not constitute investment advice or reflect Cointelegraph's official view. Now, on to the next topic, we'll cover the latest news regarding Coinbase. The SEC sues Coinbase for breaking US securities rules. The SEC lawsuit alleged that Coinbase has never registered as a broker, national securities exchange, or clearing agency, evading the disclosure scheme for securities markets. The lawsuit further alleges that Coinbase has operated as an unregistered security broker since 2019, almost 2 years before its initial public offering in April 2021. The SEC alleges that Coinbase's staking program includes 5 stackable crypto assets, meaning the staking program is an investment contract and therefore a security. Is this similar to Binance's case? Yes and no. Firstly, Coinbase is a US listed company with a huge base of North American clients. There's no way currently to move its operations abroad without a significant reduction of their user base and volumes. Moreover, Binance has other issues involved, such as money transfers between related entities and a potential illicit use of client funds. So the first read for Coinbase shows a much lighter case when compared to Binance, which is very unlikely to become something more meaningful or more eventful. On the other hand, Binance and CZ face odds of having other cases from the Department of Justice and criminal charges and some other things. So Binance's chance of escalating is much higher than Coinbase's. Again, in Coinbase's case, we have an explicit list of several tokens that are deemed securities by the regulator. But what can the SEC do against Cardano and Solana in the first place? Delist it from exchanges servicing US clients? Maybe block those companies and foundations to use the US banking system? It's not something that should cause the altcoin prices to collapse. I mean, the SEC only has mandate in the United States, and Cardano and Solana are global cryptocurrencies. Doesn't matter if they are centralized or not, there's nothing that the US regulators can do to stop, to halt, to block even North Americans from accessing those coins. As I've explained earlier, they can buy stablecoins or they can buy Ether, send those coins to a DeFi, a decentralized finance operator, or even to OKX, to Huobi, or whatever, and buy those blacklisted cryptocurrencies abroad. So the SEC has no power over there. You have to remember that the SEC is battling Ripple XRP since late 2020, and we're not even close to a final decision, let alone if that happens to move to a superior court. So my best guess is I'll follow Arthur Hayes, the BitMEX founder, who believes none of this matters if the US Federal Reserve continues to print trillions of dollars to sustain the economy. Investors will scramble to find scarce assets, so a crypto bull run will happen whether or not Coinbase and Binance are taking part of the process. On our third and final topic for today, the article written by William Suberg will discuss whether betting on a $24,000 Bitcoin retest makes sense after the worsening regulatory environment. Bitcoin traders bet on $24,000 Bitcoin price as market digests SEC versus Binance and Coinbase. Trading suite Decent Trader warned about a high long to short ratio on Bitcoin this even beating levels seen after the implosion of the FTX exchange in November 2022. Here you have the purple line. It's the Bitcoin long to short ratio, and you can see the spike here. It's higher than has been for the past couple of years. Typically, the long to short indicator measures the Bitcoin futures markets, which mean traders using leverage. However, this metric can be deceiving, as the liquidation of long contracts will cause the ratio to increase. For instance, if you deposit $1,000 on the exchange and you bought 10,000 worth of Bitcoin futures, if the price moves down, the exchange will sell those contracts to reduce your risk. So it shows you in that way. So if the price goes down, the longs get higher leverage levels. So it appears that they're increasing exposure, which might not be the case. But assuming those buyers really stepped in using leverage to defend the 25,500 level for Bitcoin, this is definitely something of concern, especially if the funding rate starts to increase, meaning buyers are paying a hefty tax to keep their positions opened. But we still don't know if that's the case. But if this happened, if leverage has been used to defend the $25,000 range, this is something that investors should be extremely attentive, because if we drop below that level, there will be cascading liquidations, which in turn could translate to the $24,000 price retest. My best guess is the long to short will adjust itself in a couple of days. Buyers will deposit additional margin to avoid getting liquidated. Therefore, there seems to be no reason to panic or bet on a $24,000 Bitcoin retest solely due to derivatives or technical analysis. Well, that's it for today. Don't forget to visit Markets Pro, the professional Cointelegraph alerts platform. Our proprietary indicators have been giving profitable alerts for months. There's a 20% link in the video's description. See you!